Okay. Hey everybody, hope all is well. It's Greg Ritchie here at Citizens Financial. This is my third presentation. I just raced back from the Bay Area, did two in person. So if my voice gives away or I start to sound different, I apologize in advance. Let's try to recap quickly. I really jump right into the Badge Broker Down Business Program and kind of talk about our amazing products and programs. There's two things I want to kind of give a little excerpt. We are about to see the reintroduction of the CalHAF, the California Housing Finance Authority's Dream for All program. I'm not the biggest fan of it. You're gonna see a lot of great people online saying it's the best thing since sliced bread. Maybe it is for them. Maybe they have different interests than you. For me, I think it could be a problem. So our DP program is very different than that. Ours gives you 3.5%, 100% of the down payment as a grant that is forgiven after 6 months. They'll give you $200,000. They'll give you $100,000, whatever the ratio is. 20% of the purchase price as a shared equity. You got to pay it back. Say you qualify for $500,000 home, you purchase a house for $700,000. It's $200,000 of shared equity you have to pay back. California is paid first. You'll pay that mortgage for 10 years before you see an ounce of equity for your own. Me, I'd rather have you get a house that's significantly cheaper. In 6 months, you have more equity than the person buying the house $700,000. Think about it, right? So therefore, you need to make sure you do the right thing, the right time, to make sure you structure you and your family's best future. Is it better to brag having a big house or have a big amount of equity? That's a choice you need to make for yourself. Here's the Badge Broker program. First of all, it's awesome. This also piggybacks on the second thing. Jerome Powell last week raised federal funds rate one more time. It's the 11th time he's raised it. He did a 1-month pause. This has made the cost of funds, cost of everything more expensive. We are getting close to the point when we are hoping to see a pause, and then depending on his fight in inflation, rates will come back down, maybe in 6 months, maybe in 12 months. But when that happens, it's like an inverted pyramid. We have so much demand in California, people that are ready, willing, and able to buy homes, but the current cost of ownership has them frustrated. The moment rates go down, you're going to see an explosion people coming back to the marketplace to buy. Now, you're here doing the right thing, make your payments, getting your debt in line. All of a sudden, you're waiving this pre-approval from another lender or us maybe. I am pre-approved for 5% down, 10% down, our DPA program. That's great. But there's a lot of people behind you waiting for 2 years with $500,000 of equity. They're going to win. So do not wait for the news to tell you when it's right. When it's right for you. You got to make that decision yourself. If you can afford it now, buy now, refinance later. Make the house that you're living in more affordable. If you can afford it now, buy it now. You'll be better off in the future. Let's hop into the program, and here we go. Here's a quick summary. Our Down Business program is eligible for residents throughout California. We are not tied to census tracts. We're not tied to counties. We're not tied to any kind of city programs. They're awesome. They're out there. But we are from Eureka to San Diego. We help everybody. This program can enable you to purchase a home up to $1 million. Want to stop there? Yes. The conventional high loan limit in some counties, California, is $1,080,000. I'm not promoting you buy a house at $1,080,000. I don't want you to buy a house at $1,080,000 just because, quote unquote, you can't do a program. You need to figure out what is your level of affordability, and we'll align the product and the mortgage with that. Make sure you find out what you can afford. There's a lot of mortgage companies, a lot of lenders, a lot of realtors that'll try to get you to afford the most you can physically pre-approved for. That's in their interest, not yours. You need to figure out what you want to make on a monthly payment and align your purchase goals with that, okay? Secondly, our second mortgage will be forgiven. That's it. It's not a second lien, third lien, it stays with you. It's something after your 6th payment, it goes away. It's that simple. You will have one loan with us. 100% of the down payment assistance, 100% of the down payment is forgiven after 6 payments. Now, the trick is, closing costs is still really expensive. That can be paid by the existing market home seller as a seller paid closing cost credit, or the home builder of choice. And believe me, the home builders are giving a ton of money away. Eligibility. To be eligible for the program, this is when you pay attention. The bar must meet only one are the following 4 categories outlined. First-time home buyer. In general, a first-time home buyer is anyone that has not had an ownership interest in a home over the last 3 years. It's that simple. Now, the second one is current retired employment or volunteer / non-paid member of a certain job. That's the next slide. But listen, those 2 bullet points cover about 95% of all borrowers that are trying to obtain a first home. The second 2 are your defaults, right? Income limits, 140% of the county's AMI, and underserved census district. 95% of people fall in the fact, hey, I'm a first home buyer. Stop talking there. Or, hey, I'm a first home buyer. That's also one of the things that I'll show the next slide. All right, here you go. This is why we call the Badges Broker Program. Any borrower on the loan application that is current, retired, volunteer, or non-paid employee will qualify. It's that simple. If you're in the military, you qualify. Now, stop there. Everyone's like, well, Greg, there's VA. Why would you want to do that kind of loan if they're 100% financing through VA? If you've been doing this with as many officers, first responders, and U.S. personnel as I have, or as long, you realize a lot of people that are in the VA have lost their VA entitlement due to life. Hey, divorces, situations, short sales, bankruptcies, foreclosures, they lose a certain portion of their entitlement. They have 2 choices. You pay it back to gain your eligibility, or you find another loan. So what if that entitlement loss is $85,000 and the house you're buying is $500,000? Does it make sense to pay $85,000 to get 100% financing back? No. It makes sense to find another product that'll be less than. This is us. You can be military personnel that's lost their VA entitlement, coming to us and we give you 100% financing. There you go. First responder, police officer, firefighter, public safety of any form, paramedic, EMT, or similar, you qualify. Educators. We used to have the teacher's loan. If you're a teacher, you can qualify with us, this program. That's gone. You can be a principal to a janitor at a school, you qualify with us. Same thing for medical. It's no longer the doctor's program. You can be a doctor, yeah, or you can be a janitor. You qualify. You can run your own self-employed daycare. You qualify. It all falls under this umbrella. Now, the last one is civil servant in a federal, state, or local municipality. So we're here in Northern California. We are close to the amazing Travis Air Force Base personnel. The amount of personnel there is about 3,200. They are not all enlisted. You have a huge portion of civilian personnel that walks the gate every day to serve our community, our country, keep us safe. They don't have the ability to get VA because they're not enlisted. This helps them. You serve in a Travis Air Force personnel, you serve in a city official, you serve in any of these local or state levels. As a civil servant, you qualify. Here's an example. I'm not trying to push you to buy a house at this price. It's just an example. Traditional financing FHA without DPA, closing costs. $6,000 purchase price, it's standard. 3.5% down, right? $21,000. Estimated closing costs. Now, this is an estimate with title, escrow, all the fees, using a borrower paid financing at the lowest rate possible. So the origination, the lender fee is charged to the client. Yeah, it's $25,000. Okay. Let's say the total cost to buy the house, about $46K out of pocket. It's really expensive. So our program, same house. Estimated down payment, 3.5%, $21,000. Typically 100% of that is covered by the DPA program. So therefore, you're not paying that. Closing costs. Now, this is where the magic comes in. It can also happen with the other traditional too, but this is where you want to really align yourself with an exceptional agent in your community to negotiate and provide a win-win scenario with the existing home seller or the new home builder to help you attain that house. They can pay for 100% of the closing costs. So we provide you a presentation, a loan estimate. You see the estimated total closing costs. You bring it to them, say, we need an addendum to the purchase price to cover this much of the seller paid closing cost credit, or a credit from the builder of estimated $25,000. We cover the down payment. They cover the closing costs. You get that house, essentially no money out of pocket. I said essentially, because you still have to have an inspection. Please do an inspection They're not required, but I highly suggest you do a home inspection and an appraisal. Appraisal is required. Those together, about $1,500. Yeah, you can buy a $500,000 house, $600,000 house for essentially no money out of pocket. Besides, maybe $1,500 towards your appraisal and your voluntary home inspection. Okay, eligible programs. It is FHA based only. It's not conventional, it's FHA. But you have these acronyms called FHA 203B. This is your standard FHA. Where it gets really exciting is FHA standard 203K. So what is that? That is FHA rehab renovation loan. So this is where it gets amazing. You find the house in your community that everyone's passing over because the cost to repair, the cost of the house to where you want it to be, it's just too much. You're already paying for the down payment. You're already paying for closing costs. And imagine you're supposed to find $50,000 repair money just laying under your mattress. It's really tough, especially in this economy. This program helps you out. You align yourself with an amazing realtor. Once again, they find the property, you find a general contractor, a licensed handyman provides you a quote, the cost to cure. You provide that cost to cure with the contract. You turn it in. They'll approve you for both. You will get 100% of those repairs paid through the escrow. They'll dish money out to him. You get your house, 100% of the down payment covered by the program, and you can structure in all of the seller paid closing costs. You get the house you want, no money out of pocket, and 100% of the repairs you want financed into the loan. It's an absolute amazing opportunity. Okay, parameters. We'll try to speed up a little bit. It's really keep it simple. 620 FICO. Well, that's about 40 points below the average of our DPAs. Most have gone to 660. So therefore 640 maybe. So 620 is awesome. 30-year fix only. No arms, sorry. It's just your vanilla 30-year fix. Purchase only. Everything else is pretty standard. Okay, here's you want to pay attention. This is for owner-occupied only. But for some reason, if you're smart, you can do a 1 to 2 unit, or you can manufactured house, which is getting very popular now. You can be a first-time home buyer, the intent to occupy, live in one unit, rent out the other unit, have that unit pay for your mortgage, and you are a first-time home buyer living in investment property with cash flow. It can be very smart, great opportunity to start out. So you take advantage of it, align yourself with a great realtor, and find you a 2-unit owner-occupied and have someone else pay your mortgage. Manufactured housing, quick tip, it's awesome, but you have to own the land. If the house is built in a park where you lease the land, probably not going to work. It has to be a fixed, low-rise foundation, and own the land the property is on, and you're good to go. All right, I'm exactly on time. It's 12:15. I knew it would take about 15 minutes or so. I hope all is well. Please get a hold of us. Please contact anyone on our team. Just go to our website, go down the pictures. You can find me or find anyone. We're here to serve. And thanks for everyone who gives us the opportunity to talk to you during lunchtime. Have a wonderful day. Bye-bye.